But the same situation applies to the United States. The debt is now so big, the budget deficit is so large, and the movement to de-dollarize is already underway, despite the knee-jerk reaction today in the foreign exchange markets. I don't think the bond market is going to allow this, right? Interest rates are going to keep rising, and that may stop the tax cuts from ever arising, because we could actually have a crisis before Trump even takes the oath of office. All right, so let's take a look at the situation that exists today with Donald Trump coming into office with the situation, or compare it to the situation in 2016. The economy is in much worse shape now than it was then. There's no question about it, that 8 years of more deficit spending, of a continuation of the hollowing out of our industrial base, all of the manufacturing jobs, the millions of manufacturing jobs that have been lost over that period of time, the record trade deficits and budget deficits that have been piled on, the enormity of the Fed's balance sheet, the final, we finally had inflation rearing its ugly head. We're just at the tip of that iceberg. But when Trump took office in 2016, the national debt was just under 20 trillion. As I am speaking, it's a hair under 36 trillion. We'll probably be at 36 trillion by my next podcast, even if I do it this week, which I probably will do, because we get an FOMC rate announcement tomorrow. Now, the FOMC should hike rates. I mean, that's what they should do. Based on what's happening, based on plunging bond prices, based on the inflationary and stimulative, in quotes, effect of these massive tax cuts that are coming, the Fed should be hiking, but it can't hike. I mean, it's got everybody ready for cuts. And so it's probably going to cut, because if they don't cut, if the Fed doesn't cut tomorrow, can you imagine Donald Trump and how they're going to react? This is political. You were going to cut rates, but now that I won, you're not cutting rates, right? So they're going to cut rates, but that should fuel the fire that's already burning in the bond market. That means we just get more stimulus, thrown on this overheated, to use that expression, which I don't really like, but economy. Long-term rates are just going to go up. But so $36 trillion national debt. So, and it'll probably be 37 trillion, because Trump doesn't take office for another few months. And we're probably going to, tack on another 500 billion to $1 trillion of debt during those final months of the Biden administration. So you have an 85% increase in the size of the national debt. When Trump took office in 2016, the annual budget deficits were high, but they were $665 billion. Now, they were actually higher than that. I'm talking about the official deficits, right? The unofficial ones were bigger, but I'm just going to compare the official deficits in 2016 to the official deficits in 2024. So when Trump came in before, he was dealing with a $665 billion annual deficit. The annual deficits now, the official ones, are over $2 trillion. So the size of the annual deficit is 3 times as big. So the problem is 3 times as great now. If you had to try to reduce the deficits, it's 3 times as difficult now as it was then. And he didn't even do it then. The deficits got worse on his first term. Even though he promised to lower them, he blew them up. It would have been easier to lower them then. Not that it would have been easy. It would have been hard, but it's way harder now, given how much larger they are. Now, when he came to office in 2016, the Fed funds rate was 0.5% to 0.75%. The Fed had just raised interest rates from 0. There were 2 hikes before he came in. So when he came in, it was 0.5%. So he still had the benefit of all this cheap money, right? Now, rates are, 4 3/4? Yes, the Fed might cut a couple times, but they can't get anywhere near the really, really low rates that he enjoyed during the first term. So now we have a much bigger debt, much larger deficits, triple the size, and much higher interest rates that we have to pay to finance the deficits. Also, just to look at where gold was, because gold dropped today. Gold was only $1,200 an ounce when he took office. That was down from 1,900 in 2011. So gold was 37% below its peak from 5 years earlier. So it was kind of in a bear market. Now, we know it was in a building a base in a trading range. But of course, now, gold is making all-time highs. So you have a much more explosive situation than we had 8 years ago, right? We have much bigger debts and a much higher interest rate that we have to pay on it. And, we've got inflation that is already awoken from the dead and is, resurrected and now going to be a big problem. So where is all this optimism coming from? Well, a lot of it is coming from the fact that we got Elon Musk, right? I hear all this now all the time. Elon Musk, that's what's different. Elon Musk is going to come in here and cut government spending, right? He's going to slash government spending with his government efficiency department. Who knows how much that department's going to spend? And people think, oh, this time it's different. They're actually going to reduce the deficit substantially and really grow the economy. No, they're not. They're not even going to come close to doing that. First of all, even if Elon Musk could cut spending, discretionary spending, because he can't get into all the big ticket items that the president took off the chart, right? He can't touch Social Security, can't touch Medicare, probably not Medicaid, Obamacare, all that healthcare spending is off the table. He can't touch interest on the debt. That's just going up. And Trump wants to increase defense, so he can't make any cuts there. And so even if he was able to eliminate every other penny of government spending so that the only thing left for the government to do was to mail out the Social Security checks and the Medicare checks, but they didn't even pay the congressman, right? They eliminated the entirety of the government. You'd still have a deficit before they cut taxes, which of course we're not going to do. Maybe he can cut $100 billion a year, which would be amazing, but it's meaningless when you got a $7 trillion a year budget, right? It's a rounding error, what they can try to achieve. Politicians have been promising for years to cut waste, fraud, and abuse. They never do it. Yes, when Elon Musk bought Twitter, he made major cuts, right? He had the kitchen sink and he went and, he got rid of a lot of dead wood. That's because he owned the company. He could do what he wants. He's not going to be able to do that with the government. Any real spending cuts are going to have to get approved by Congress. They're not going to vote for it. Congress already has proven they won't cut spending. They'll talk about it, but they won't actually do it. I'm 61 years old. This game has been going on for a long time. I can't even remember the names of all the fancy plans and acts that they passed over the years to handle the deficit. And none of them have worked. That's why we have $37 trillion in debt, because none of these plans ever amounted to anything. There were never any cuts. To the extent that they ever agreed on cuts, they were cuts that were going to take place at some far off future date. They would always kick in 4 or 5 years into the future. And you know what would happen? Before we actually got to the date where they kicked off, they would cancel them, because nothing is set in stone. One Congress can't bind some future Congress. This is also, they can pretend they've cut spending, right? And they can budget it, in their books to make the deficits look smaller. All the projections for the debt assume that the Trump tax cuts expire. Well, clearly they're not going to expire. They're going to get renewed. So all this talk about efficiency in government, cutting government spending, rolling back government, this is all talk. We heard the same nonsense or rhetoric from Trump when he ran before in 2015, and they increased spending, increased warfare spending, increased welfare spending, blew up the deficit, despite promises to pay off the national debt and all kinds of grandiose promises that Trump made on the campaign trail. He didn't keep any of those promises. All he did was cut taxes, but he didn't really cut taxes. He replaced income taxes with the inflation tax. A lot of the inflation that has shown up under Biden was born under Trump. Trump just doesn't have to accept any responsibility because the official measure didn't really shoot up until Biden was in office. So that was a lucky break for Trump. And that really helped him in his election because he could say, look how low inflation was when I was president. But it wasn't low, it was high. Money supply expansion, that's inflation. The money supply boomed under Trump. The consequences were delayed until Biden was in office. But he made the same mistakes. Now, sure, Biden, compounded the mistakes. Who knows what Trump would have done differently had he had a second term? But the economy would be a mess if Trump was reelected, right? People want to pretend that it was great and just Biden screwed it up. It wasn't great. It was bad. It just got worse. And it's going to get worse under Trump. In fact, the only way it can get better is if it gets worse first. The problem is Trump didn't promise that. Trump didn't promise austerity. He didn't say, look, we have to pay the piper for decades of profligacy. We have to get our fiscal house in order. We got to tighten our belts. Nobody has to tighten their belts. Let them out, right? We have all this debt that the taxpayers are on the hook for. And what is Trump saying? I'm going to cut your taxes. How can he cut your taxes? We got to pay for all this government. I start out by saying that spending cuts never happen, right? Because every pork barrel. Now, we will have tariffs, and that will somewhat offset the tax cuts because Americans will have more money because they're paying lower taxes, but the stuff they buy will be more expensive because of the tariffs. So they'll have more money to pay higher prices. So the tariffs will replace some of the revenue that the government loses to the tax cuts, but not anywhere close to all of it. It's going to be a net big loss of revenue to the government at a time when it actually needs a lot more revenue to cover the spending, which is going up, right? The spending is going to increase. Not only are they not going to cut spending, spending's going up because it's on autopilot. Even if they don't vote to increase it, it increases anyway. Unless you vote to decrease it, which they won't, it grows on autopilot. And so what I think is going to happen is the markets are going to bring this honeymoon to a close, maybe even before Trump is married with his, inauguration. The honeymoon could be over before the marriage starts because the bond market could rain on this parade. But the same situation applies to the United States. The debt is now so big, the budget deficit so large, and the movement to de-dollarize is already underway, despite the knee-jerk reaction today in the foreign exchange markets. I don't think the bond market is going to allow this, right? Interest rates are going to keep rising, and that may stop the tax cuts from ever arising because we could actually have a crisis before Trump even takes the oath of office, which would be great news because then it's hard to blame Trump. I mean, maybe they'll say, well, it's because people are worried about Trump. But if it happens while Biden is still in office, so much the better. But if we don't get a bond crisis that stops the tax cuts before they happen, we'll get a bond crisis after the tax cuts happen, which of course will be worse for the, blaming it on Trump. But it's going to happen. There is no way. Now, there's only one way that you could stop this because the UK really didn't have, this ace up its sleeve like we do for now. The Fed is going to have to go back to QE, which is what I've been saying they're going to do. The only way to stop long-term interest rates from soaring and crushing the economy and the stock market and the banks and everything, right, that Trump is promising to pump up. The only way we can have these tax cuts, at least in the short run, is if the Fed goes back to quantitative easing to monetize the massive budget deficits that the tax cuts produce. Now, that is not bullish for the U.S. dollar. It's the opposite. That is not bearish for gold. It is the opposite. So I was talking about the Trump trade before and the stocks that were going up on anticipation of Trump winning that have still gone up. And, maybe the buy the rumor, sell the fact will take a little longer before the selling comes. But now the Trump trade is the inflation trade. Gold is now the Trump trade. Silver is the Trump trade. Mining stocks are the Trump trade. Big time. Because that is what Trump is going to produce.
Schiff highlights how the U.S. national debt and budget deficits have ballooned over the years, leading to a more precarious financial position. In 2016, the national debt was $20 trillion, but by 2024, it had surged to nearly $36 trillion. The increasing debt makes it harder to reduce deficits or manage government spending, as interest payments alone become a burden. For investors, this suggests that the government will struggle to rein in spending, which may lead to inflationary pressures, higher interest rates, and long-term challenges for bond markets. Schiff points out that the Federal Reserve's inability to raise interest rates due to political pressures and the looming bond crisis could lead to a continuation of inflationary policies. The Federal Reserve may resort to more quantitative easing, QE, to prop up markets and finance growing deficits. For investors, this means being prepared for higher inflation and rising interest rates, which can erode the value of cash and bonds but benefit assets like gold, silver, and inflation-resistant sectors. Schiff is skeptical of political promises, particularly those related to cutting government spending and balancing the budget. He argues that politicians often fail to follow through on pledges to reduce deficits or shrink government, as major expenditures like Social Security, Medicare, and defense remain untouchable. Investors should recognize that the political environment is unlikely to deliver meaningful fiscal austerity, making it critical to factor in continued government spending deficits and inflation when planning long-term investments.